Good afternoon, good morning, good evening. This is the Educational Market Update. I'm your host, Bill Noble. For all the latest and greatest research and news, stay with us. Stay with the group that you are in. We are providing you with the best research and education in the system. Okay, Crypto Ceph. Solana is moving. Thank goodness. Thank goodness. All right. Now, before I get into it, let's talk about they want me to do these streams now with more of like an educational bend. So there's probably a lot to talk about. We're going to talk what is Bitcoin, okay? Um, you know, how Bitcoin was born, the Bitcoin ETF, the connection between Bitcoin and, say, crypto equities. And then we're going to talk about how both the stock and the crypto crowd look at things like even number resistance points like 50K and catalysts like the Bitcoin halving. Now, if you don't know what the Bitcoin halving is, that's all right. I'll do my best to explain it. Okay. It's a very big deal in the crypto world because cycles are a big deal in the crypto world. As you may know, crypto seems to run up for a year and a half and then collapse for a year and a half. And this has been going on since 2016. And what people like doing is measuring, like, when is the cycle going to begin? What happens before the Bitcoin halving? What happens after the Bitcoin halving? What happens 3 months after, etc. Right? Benjamin Cohn, YouTuber, made his name doing stuff like this. Everybody, all the crypto quants and all these organizations have got all this really cool data. And guess what? I think all that has changed because of the Bitcoin ETF, that there's now an equity market mentality. And I'm even seeing equity market style price action in the market. We'll talk a little bit about that. So this is not just what is Bitcoin, but it's how does Bitcoin move around and how is that different from some of the things that we've seen lately. And of course, I'm going to throw alts in as I can. But I think it's really important to understand, what drives Bitcoin, and also, the fact that you're seeing alts, sometimes you'll see alts spike up 20% and then come back down. And then another group of alts will pop up 20% and then come back down. Frequently, what moves from an altcoin or a tech stock point of view or a small cap or mid cap point of view in stocks is stuff that nobody owns. The under-owned coins or stocks can spike up. And the stuff that everyone owns, there's not enough buying pressure. But I'm digressing. Don't let me forget to talk about liquidity and alts, because I can throw in some Fed stuff here as well. SGSG, welcome. All right. So let's begin with something different. What is Bitcoin? Well, I'm not going to read to you what's in the books because it's boring. And I don't even know if it helps you understand what it is. So Bitcoin is an alternative asset. An alternative to what, you may ask? Well, there's stocks and bonds and anything in legacy, right? Obligations or things that are related to corporate earnings or corporate debt or government financing, etc. And it's obviously an alternative currency, right? It's an alternative to gold and silver, dollars, Swiss francs, as a way to either park money or, trade currency or foreign exchange. Now, most people's experience with foreign exchange or foreign currencies is at an airport, right? You go to the airport, you're going to go to Japan, you hand them some dollars, they hand you some yen, and off you go. Okay. Bitcoin is an alternative, and one day you will see Bitcoin at those currency booths, right? It's just another thing you can trade against the dollar. So it's an alternative asset. So if Gen Z doesn't want to invest in the same thing their parents invested in, they can go to the alternative asset class. Again, that's going to be different from what you're going to read in a crypto textbook. Now, one other thing I might add, in case that did make sense, is that Bitcoin is a meme for hard money, meaning it is so, from a computer science point of view, it is so difficult to actually run the Bitcoin blockchain, the computer computations, the processing power. It is so difficult to create a Bitcoin that's what helps give it its scarcity. Okay. In other words, Bitcoins don't just appear. They don't. So it takes a lot of work to make a Bitcoin, and that's kind of what makes Bitcoin unique. Now, how was Bitcoin born? Okay. Bitcoin was born at the end of a massive financial crisis in 2008, where banks failed because of massive speculation in heavily risky assets, the assets dependent on consumers who had borrowed too much money making their payments. And when they stopped making their payments, all these assets collapsed and all these banks collapsed because they had these risky assets on their books trying to keep up with Goldman Sachs, which was the company that I worked for. So all these banks failed, and like equities went down 40%, which was, ungodly at the time. Nobody had ever seen that. 10 years of gains were wiped out in the S&P. Okay, that's a lot. So out came this mysterious white paper from this anonymous person, Satoshi Nakamoto. Nobody knew who this guy was. Nobody still knows. To be honest with you, the only way to keep something that secret for that long is to have it come from an intelligence service. So it's quite possible that some intelligence service created Bitcoin just to make sure that there would be an alternative currency in the event there was something equally or worse than 2008 that ever happened again. And back then, Bitcoin was not Bitcoin like it is now. Bitcoin was basically an old coin. It was a complete S coin, in fact. Right? It was just like, you had to call somebody on the phone and give them a Bitcoin address, and they had to they had to send it to you. My first boss was involved with that. Okay. So Bitcoin is this wildly volatile asset, right? It was like, okay, Bitcoin's at $11. Now Bitcoin's at $1,000. Now it's back at $11. I mean, these kind of swings would happen. Okay. Now transport yourself to the present. Okay. Bitcoin is now an institutional asset. Okay. Bitcoin is going to be controlled by flows into the Bitcoin ETF. Now, what is an ETF? Well, it's like a container, right? It's a container that you put anything in, oil, stocks, whatever. Now it's spot Bitcoin. And then people, investors, can send money, right? And say, hey, I want to invest in this. They buy it in the stock market, just like anything else. And then BlackRock, say, has to go into the open market and get the Bitcoin to make sure that everybody's little container is full of Bitcoin. Okay. So this changes how Bitcoin moves, right? So Bitcoin was and still is in some ways a meme for hard money, meaning something that's really scarce, something that you can't just print. So as more people want to own the meme for hard money, right, the more money floods into this ETF product, meaning there's 9 legacy entities that are competing with each other to get the flows, to get the money coming into their ETF. Now, part of that is because they want the Bitcoin and the Bitcoin ETF. They want to be players in this market. They want it on their books. Everybody knows about the debt. They know about the dollar. I've gone on and on about this. You know what? Sometimes I think that if there are problems out there in the world with the US or with the dollar or whatever, I'm almost to the point where I'm like, you know what? We don't have to trade it in those markets. we're just going to trade it in Bitcoin. And you know why I think that way? Because that's how people in the stock market would think, because I worked for Goldman in equities for 12 years. Now, one thing you may have been noticing if you've been around or your first time in crypto was watching the Wild West show that happened in the fourth quarter of last year is that, this market is like moving very slowly, right? And in crypto, sideways is scary because a lot of the biggest collapses, including the final thrust lower in 2018, occurred when markets kind of did nothing. So you see the market do nothing and you're like, yeah, this looks terrible. But in equities, things can move like that for an extended period of time, and then they just lurch up like today, right? Today's Feb 12, you're watching Bitcoin, just kind of lurch itself or try to press 50. Now, again, bringing it back to the present, back to stock market and ETF price action and stock market thinking, these guys, they didn't really get a dip. They didn't get the dip that they wanted. NVIDIA, chip stocks, S&P, all blowing through their all-time high on massive speculative fever, but Bitcoin is below its all-time high. And Bitcoin hasn't gone vertical like everything else. So equity market investors are like, oh, goody. Now let's share a chart and talk about, oh, goody. Okay. So this is NVIDIA. They make chips for AI. So right now they're helping build Skynet. So people can't get enough of these chips. Now, just to give you an idea about how big NVIDIA is in terms of market cap. So this gap here, which, you can't even really notice now, that gap up on NVIDIA earnings was that added about $250 billion to NVIDIA's market cap. Just so you know, that was more than the market cap of ETH at the time. It's unbelievable, right? NVIDIA is currently the fourth largest company by market cap. Now, after this gap, what did NVIDIA do? So from June to July, for 6 months, NVIDIA just kind of went sideways, right? This is like what Bitcoin does on a daily or even like an intraday chart. You just kind of watch it. And it's just sort of boring. And then you just kind of wake up and retail and institutions are just FOMOing in from 480 to 720. You sit, and then boom. And this is pretty extreme, but this is classic equity market price action, right? Now, if you ask me, Bitcoin may be in this stage. This is just like on the fly. This could be the stage that Bitcoin is in right now, where people think 50 is resistance, and it's not. It's not. 60 is resistance. I've got the chart. So, if this is the mentality driving Bitcoin, Bitcoin is going to move slowly. Okay. Crypto hedge funds maybe can jump in front of Bitcoin, or I saw today that they started ramming ETH higher. So everybody is trying to find the thing that they can, either that's going to go up more than Bitcoin, or anybody who just, can't get enough Bitcoin is going to start buying anything they can get their hands on. This is another thing about equities, right? So let's just take a look at that, because that was a little bit too fast. So when BlackRock has to buy spot Bitcoin, right? Like you invest in the ETF and then BlackRock goes, oh, look, new ETF buyers. We have to get more Bitcoin. How does BlackRock get that Bitcoin? Did they have just some like giant Coinbase account? Some guy on his phone just hits a button? Not exactly, right? These entities are so big that they probably have to go through huge over-the-counter desks, or actually like almost like, Goldman Sachs like company, except in the crypto world, which would be somebody like Galaxy Digital, right? Now, when they go to Galaxy Digital, there's going to be this giant trading desk, traders, managers. So BlackRock's going to come and say, well, we need all this Bitcoin. We need tons of it. Do you have any? Or can you give us a price where you just sell us some and then you go figure out how to cover it? That's right. We need Bitcoin and you're going to sell it to us and make yourself short. So who wants to be short Bitcoin in this environment with BlackRock coming? Nobody. So all these guys, they're like car dealers. All these places where BlackRock will go to get Bitcoin, they're like, well, we're not going to get caught without Bitcoin when BlackRock calls. We're going to go buy it now. Or we're going to buy ETH, or we're going to buy, anything that gives us protective upside in case BlackRock calls us up and says, yeah, we want all the Bitcoin on the planet now. Places have to buy it before BlackRock does. Not because they're front running them, just because they have to have inventory when BlackRock comes in, which is why you get this price action where it's just like grinding higher, right? That's just everybody just accumulating, looking for the big guys to come in. Because, that's how trades can get done. That's how it used to get done at Wall Street. There's a variation of it now. But BlackRock and all these entities don't just get BlackRock. They don't just get Bitcoin out of the blue sky. They don't. Now, let's talk another thing about equities mentality. So there's the Bitcoin halving. Let's talk about what that is. So Bitcoin runs on a blockchain, and I will leave it up to you to delve into the computer textbook about a blockchain. I call a blockchain an indestructible spreadsheet, right? In other words, it's going to have entries of transactions. And once that giant computational mechanism that the miners use, so Bitcoin, there's no Bitcoin headquarters, right? This giant spreadsheet is kept or is maintained by giant computer warehouses all over the world. Every time there's a transaction or every time there's anything going on in the Bitcoin blockchain, these guys are the ones that sort of like weld it or burn it into this spreadsheet. It's like it's like indestructible once they put a block into the blockchain, right? Now, don't mistake that with Bitcoin or the crypto itself. That, of course, can be taken away. Okay, but once they burn it into the blockchain, it's there. Now, that's one of the things that makes blockchain cool, okay, because that record keeping is there, but that record, again, has to be maintained by somebody. Now, the people who maintain that blockchain, what do they get for maintaining it? Well, guess what? They get Bitcoin. That's what they do, right? They're like, oh, well, we want Bitcoin. We're just gonna provide, build more computers, get more air conditioning, build a bigger farm, because we want to get more and more and more and more Bitcoin. And a lot of these places are holding on to it, and a lot of these places are publicly traded. And ironically, they all took a hit when the ETF came out. We'll talk about that later. But the Bitcoin halving refers to the people that maintain, the people who maintain the indestructible spreadsheet. They get less Bitcoin. They get half as much Bitcoin as they were getting before, sometime in April. Now, this doesn't really reduce the incentive to make Bitcoin, to maintain that indestructible spreadsheet, but it creates, a very big scarcity issue, which of course is really interesting with BlackRock with a giant vacuum trying to hoover it all up. Now, normally in crypto, there's a huge run up into the Bitcoin halving, and then everybody likes to sell the fact the market goes down 30%, and then everybody buys it back for the rest of the cycle. Now, I think the cycle has changed, as you might tell, because I think it's going to be a more orderly, equities-driven ascent, and there'll be a parabolic at some point like NVIDIA, okay? But I think we're moving to a world where, the halving is this big selling catalyst. Now, let's talk about, that's one theory. So saying this time is different can be dangerous. But let's take a moment to think about how stock market investors will think about the Bitcoin halving. So they're going to look at NVIDIA and they're going to look at Bitcoin and they're going to say, well, Bitcoin hasn't gotten to its all-time high. And then there's this big event coming up where the supply is going to be reduced. Now, crypto people, some of them think that's a sell the fact event. Well, maybe if Bitcoin's at 70, maybe it is. But equities people right now in February are going to go, oh, cool. This new thing is out and there's a bullish catalyst coming. We love bullish catalysts. So crypto people are like, oh my God, there's resistance at 50. Oh my God, I can't buy it in front of the halving. Meanwhile, the thundering stock market herd led by BlackRock and friends are like, oh, goody. Let's get in now. There's a bullish catalyst. No, they could just, they could just indiscriminately buy this thing all the way up to 60K. Now, I don't want to be a moon boy and say that it can't correct, but I don't think the Bitcoin halving is automatically sell the fact, because guess what? If you just learned about what the Bitcoin halving is, people in legacy got to learn about it. And you know what? They got to learn this they're not learning it from me or anybody else you see in these groups. They're going to learn it from like a stockbroker. The stockbroker is going to say, yeah, that's just automatic supply reduction built into how Bitcoin works. Oh, wow, less supply. Okay, let's buy. Or even equity market investors. Oh, it's down 5%. Oh, that's great. They love that. They're taught to ignore the noise. It's a Charles Schwab thing. So where everybody was like, sell the fact, it could be like, buy the rumor, buy the fact. In other words, the Bitcoin halving could go down, crypto people could sell, BlackRock could be down there waiting, and then May, June, July, it's the most breathtaking thing you've ever seen on the upside, because everybody thinks it's over and it's not, right? And you saw what NVIDIA did when I put that chart up. You get this winding of the spring, the winding, and just see it. Gone. Okay. Now, let's talk about the kicker. Okay. It also brings into mind why altcoins, like altcoins will go up 20% and come back down. It's kind of annoying, right? Everyone's looking for the kind of price action that you saw back in December, and you're not getting that. You're getting something totally different. Totally different. So the Federal Reserve recently, first at the end of last year, they were like, we're going to lower rates. And then they flooded the money with markets to try to help banks. Then they changed their mind. Inflation's not really going down. They didn't want the dollar to go down off what, a European leader said in an interview. So they left rates high, and, all the money kind of flooded into stocks. And then there sort of isn't enough money in the system to pump everything. Okay, well, guess what? I got news for you. The employment situation in this country is changing. Tech companies are laying people off in 5,000 person increments, and I don't see that stopping. Most of the job creation that's happened has been part-time jobs. Matter of fact, all of it has. And the employment statistics are not being reported correctly at all. So the Federal Reserve is eventually going to have to lower rates, or they're going to have to flood the markets with money, because of this like slow rolling train wreck in commercial real estate. Now, if I know that and you know that, then guess who else knows that? BlackRock, the guys the guys who sell Bitcoin to BlackRock, they know this. They know this, right? They know that, the Fed's going to have to wake up one day and say, yeah, we got to cut rates. So they're going to do the whole trade before that. If there's a sell the fact, you might sell the fact when the Fed actually cuts rates. But we're not even there yet. They're still in this mindless talking tough phase. Railroad, it says smoke and mirrors. Right. So in the short term, that stinks because, altcoins don't have the oomph to get going all at once. So, first it was Solana, today it's ETH. 3 days ago it was Immutable X, Bitcoin Cash spiked. If you're going to trade alts, that's just really it. A lot of times you're trading it, meaning you get involved in something, it pops, you take the money, and that's the way it's going to be. Maybe something changes in ETH. Maybe they're going to go after ETH because they think the dollar is going to go lower. We'll talk about that maybe another day or maybe today. But the reason alts aren't that fun as a group is because there's not enough money in the system. A lot of it's being sucked into equities. And if the Fed isn't aggressively printing, then it can be difficult for everything to go up all at once. Okay. So in some, and I'm gonna go through like some charts, right? This idea of Bitcoin as a meme for hard money, as a meme for something that you can't print, right? As a meme for something that, they really can't lie to you about. I think if there's a lie in Bitcoin, it's about the extent of the demand. They're not really telling you the extent of the demand. Because again, who's going to want the Bitcoin ETF? So we went, down the chain. So we started with BlackRock, right? And then we said, where does BlackRock get the Bitcoin from? So we went down the chain. Now, who's above BlackRock? Well, that would be the $56 trillion in global pension and retirement funds, like the employee retirement system of Texas, the teachers retirement system of Texas, where I live. Huge buildings, huge funds, huge. What is going to happen if 1% of the money in those pension funds wants to go into Bitcoin? That's like 5 trillion, right? It's like 560 trillion or some huge number. 1% of that money winds up in Bitcoin. So above BlackRock are these giant players. They're going to call up BlackRock and be like, yeah, guys, we need 25 billion. We need 25 billion in the Bitcoin ETF. Can you start working on that for us? And then BlackRock's like, oh my God. Right. No, that's not exactly how it goes, but it's close. Like there are sales forces inside places like Galaxy Digital. There are sales forces who maintain relationships with these big funds that work inside BlackRock and these other companies, right? They're going to know, right? And that's when you're going to see Bitcoin start acting like NVIDIA. So you have to, because this ETF, like everyone thought the ETF was coming and it was just number go up. People didn't want to do any critical, because it's not because they didn't want to do any critical thinking. They don't know how stocks work. And of course, nobody wants to hear that Bitcoin's going to trade like a stock. It's okay if it trades like NVIDIA, right? Goes sideways to up and then just goes parabolic, which is probably what's going to happen. So you need to understand all these different players, and you need to understand that when some of these cryptos go down, there's always somebody waiting there, right? There's the people who have to get the Bitcoin for BlackRock. There's BlackRock. It could be BlackRock itself, right? They're all standing down there going, oh, good. And if it doesn't go down, they just have to market buy it. Like this thing is at 50. No one wants to buy it at 50. Okay. You guys are going to pay 60. Let's talk about that. All right. So I'm going to try to bring some education, some market stuff into the education, right? Like I think it helps like burn in the education. So this is Bitcoin Monthly. Okay. This is Bitcoin Monthly. Okay. This is my Tom DeMark system. So Tom DeMark was a quant technical analyst before they were quant technical analysts, right? This guy was hired by a big hedge fund to hire a building full of computer programmers and make these indicators One of the most famous ones was something that helped predict tops and bottoms, which, believe it or not, like in a down market, if somebody wanted to buy, they would have to use DeMarc's indicators to start slowly purchasing things because these funds were so gigantic and the markets they were playing in, like commodities, were so tiny. So they needed a top and bottom signals, and they needed to know how to scale in and out, just as a point of history. Now, one of the things that DeMarc does is he created this little system where each little candle can get a number. And, it's kind of like, well, if the high is higher than the high 2 bars ago, then we'll give it a number. It's more complicated than that, but this is how people read it, right? They'll say, okay, this is a monthly chart. So this is before the FTX debacle. So Bitcoin goes down. That's the first one. And then down again. And then on the third and the fourth candle, you had these upticks. And notice these candles, right? You opened here, you went down here, you went all the way up here, and you came back, right? It's like 2 months. Everyone thinks it's going down. No, it's not. Everyone thinks it's going down. No, it's not. Everyone thinks it's going down. No, it's not, right? I mean, one day we can talk candlesticks, but, when you see these candles that look like tops, where there's a little body and these long wicks, that's what's happening. It's like, oh, it's going down. Oh, I'm squeezed down. Oh, it's going down. Oh, is it 2 months of squeezing people? 2 months. Then on the 5th bar, what happened? Down. 6th bar, down. Oh, we're going to cover because I can't be short down here. Up, down, huge. 1, 2, 3 months, total nuke. Flashback over here to the present, which is why I call this market FTX in reverse, right? 1, 2, 3, 4. So on the third and the fourth candle, this was your chance to get out on FTX. And on the fourth candle, they took it all the way up. They dropped it off the ETF, right? Because number didn't go up. So everybody sold, drove it all the way down here, and then brought it back, closed the month even. So your chance to get in, candle number 4. Candle number 3, candle number 4. Those are the types to get in, okay, to get that 5, 6, 7, 8, 9. Well, guess what? Last month was the dip. This month is up only on number 5, and there could be 2 more months of this. And guess what? Everyone's like, oh, 50K. Yes, okay, that's a good psychological, 50. Okay, I get it. But we've got this whole thing like Bitcoin's above 50. Oh, it's at 51. Oh, it's at 52. Yeah, all right. Well, did you see how NVIDIA acted once it went? Like Bitcoin could be in that stage where it just kind of like the resistance based on a DeMarc work, like this little dotted line, okay, that's drawn by this system that makes the numbers. You could have 5, 6, 7, 8, 9. This is monthly. Now, of course, every candle is not a God candle or a huge candle, but this thing shows 60K is the point, not 50. Everyone's like, ooh, I can't buy it at 50. Okay, bro, well, you can buy it at 60 then, because that's what's going to happen. Because you know what? They're not going to care in equities. Pension funds want it. They're like, oh, no, we better buy it because we can't have another NVIDIA on our hands. We can't miss that. Oh, wow, Bitcoin hasn't made an all-time high yet? Oh, great, just put money in. Because we're all sitting here watching the chart like, ooh, it's at 51.5. No, they don't care. They don't care. And if it blows through, 60, it should stop. If it doesn't, well, forget it. They're just going to take it out. They're just going to take it up because they're not price sensitive. Now, I'm sure they will be price sensitive at 60 because I don't doubt that it can just go right to 60. It could grind higher or it could explode higher. I don't know. But the point is, crypto is acting just like crypto acted the last time. That's the similarity of crypto, right? This was a collapse. This is a huge rally. This was fueled by institutional liquidation like FTX, Celsius, Luna. This is being fueled by institutional investment, which is BlackRock, Galaxy, and all these other players. Okay. Now, I'm sure you've also heard, or maybe not, that because of like what's going on with like NVIDIA, that the stock market is just like, this rock and roll paradise. Okay. So here's Michael Saylor's company. So there's this whole world of crypto equities. Some of them actually help maintain the indestructible spreadsheet. We'll look at it. But here's Michael Saylor's company, MicroStrategy. Okay, now these guys own a lot of Bitcoin. So if you wanted to own a stock that was connected to Bitcoin before the ETF, you bought MicroStrategy. So, you know, the ETF comes out. And what does everybody do with MicroStrategy? They go, well, no one wants this anymore. So let's sell everything. Okay, that's nice. Thank you. You just brought the market down to the 62% retracement of the last up move. Okay, right here. And a lot of times in crypto, when the 62% retracement holds on a correction, that's usually a good sign. And it's even better because I don't know if you can see it, but they did this little extra special thing, which happens all the time, particularly if you're following traders. They love to see support. They love to see it get broken, and then they call it the reclaim, right? And then it comes back through the broken point. So look what they did to MicroStrategy. This is Michael Saylor's company. He's got like, I don't know, he's got all the Bitcoin that there is, right? But again, just to put it in perspective, like after like 2 or 3 weeks, the Bitcoin ETF system had as much Bitcoin as MicroStrategy has. And then, of course, after everybody realizes, after how many days? How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 20 days. I was like, no, I don't think we should sell this. Matter of fact, you know what? I think we should buy it. And then it's just gone. This is classic equities, right? Okay, Galaxy Digital, right? Let's have this fun little game. So you're like, oh, I can't buy Galaxy Digital. It's too high. This is the hedge fund. This is the only real entity that I think can produce the size. Excuse me. Produce the size that needs to be purchased. Because I'm sure the guy who runs it, Mike Novogratz, has been buying Bitcoin the entire bear market. So it's like, oh, I can't buy Galaxy Digital because it's up too much, right? It's, you know, by the way, they sold it to $8. $8. So to give you the laughability of $8, the all-time high in Galaxy is 43. So if you think everyone gets that this is a bull market, they don't. Matter of fact, they're just like waking up to the fact. And if anything, in Galaxy, it's kind of funny because, again, you know, we're talking about this equity market mentality. Equity market people are going to be like, oh, look, this hasn't even filled the gap at 13. See how they ran away from it? They're like, ooh, the gap. Well, guess what? In TA, when they're afraid of something, they run up to it. They go, oh, I'm too scared. And it comes back off. But when it goes back, people are like, oh, yeah, now I'm getting way more brave. I'm just going to take it out now. Are you telling me Bitcoin is going to stop at 50K when this stock can go from 11 to 40? And what happens when they start going after all these stocks, right? Like stock market people like, okay, I can buy NVIDIA at 700, or I can buy Galaxy in the Bitcoin ETF. What are they going to do? Okay, Railroaded is up huge in MicroStrategy, right? Now, the Bitcoin miners. You know, I talked about this, and I probably talked about it too much because I wasn't aware that, you know, a lot of people were going to sell some of these stocks before the Bitcoin ETF, but that's what they did. So this is Marathon Digital. This is the people who maintain the spreadsheet. They maintain the blockchain. They're called miners. So, gee, Marathon Digital went up, crashed to support. See all these like prior highs? They were the ceiling, and the ceiling, once you break it, becomes the floor. So how nice of them to take it down here. The stock is currently at 27. Oh, and the all-time high is 82. Now, why do we care about these things? Well, eventually in the future, when people have to buy, massive amounts of Bitcoin, where are they going to get it all from? Where are they going to get all this Bitcoin from when all these pension funds and all these players have to come in? I was a little early on this because I didn't know that they were going to dump it. But I mean, you have to start asking yourself this question. After I told you this whole story about how Bitcoin price action has changed, about how the perception of the halving supply reduction might change, where are they going to get all this Bitcoin? They're going to have to start taking over companies that have Bitcoin on their balance sheet, which is like Marathon Digital. I don't know if they're going to come after Galaxy, but you never know. Galaxy might go after Coinbase, right? And this 3-day chart, right, this oscillator, it's a little complicated, but when that gets close to zero like that, that means a really big move can occur, which is exactly what's happening. And guess what, people? 15% is not a big move. It's up 15% today, but that's not a big move when, it was just at 16 and the all-time high is at 82. Again, stock market investors are going to look at this and be like, oh my God, this is so much different from this. You know what I'm saying? Like, gee, I can buy something that's way down or I can buy something that's way up. Matter of fact, the entire stock market is actually going down. Things like Nvidia and Apple they're holding up the entire market. The stocks are so big that it looks like the stock market's doing well when it actually isn't. It isn't. These big stocks are doing well, but everything else is doing poorly. So again, what are stock market investors going to do when they get to crypto? Stock market people don't overcomplicate things. Schwab has 7 rules, like be mindful of taxes and know when to buy and sell when it's tax favorable for you. Ignore the noise. When the market goes down, the market will come back. Ignore the noise. That's what stock market people go, oh, it's down? And crypto people are like, oh my God, I'm so wrecked. I'm liquidated. Equity market people like, oh, it's down? Oh, good. Let's get some. Completely different. Now, of course, stocks are up only for 15 years. So naturally they can afford that mentality. But I think one of the keys to understanding crypto is that crypto is influenced by equity. So you got to know how people in equities think about investing and trading, particularly in volatile assets. Okay. So let's sum it up. 50K is not resistance. It's an even number, but I think 60K is resistance. And I don't think equity market players are going to care about resistance until you're close to the all-time high. And if you look at this NVIDIA chart, well, NVIDIA was at 480 and then it was at 772. So some very serious froth going on there. And if that pours into Bitcoin, you just don't want to be caught sleeping, right? Don't think that a slow-moving market is not a market that's moving, right? So now that you hopefully understand how the stock market mentality is now a component of Bitcoin, you know what the halving is, I hope. You know how crypto people perceive it, and you're getting a guess as to how stock market people perceive it. And then there's the Fed kicker, right? We know that the Fed is eventually going to have to lower rates. They may start buying Bitcoin well in advance of that, because that's kind of classic, right? Markets move 6 months ahead of an actual event. The event that most crypto people think about is to sell the fact on the Bitcoin halving, the supply reduction. The real trade may be to sell the fact on any rate cut, which is very typical for legacy. So I hope that helps. Leave a comment, send a DM, put something in the chat. I'm Bill Noble. I will see you next week.